First, I guess it's important to say the time horizon, right? This is not a one-year trade, right? If you're looking to retire in the next 5 years, this is not what you want to do. This is a high-risk, high-return type strategy. But if you think about the four fundamental drivers of any stock, really, is your dividend yield, earnings growth, valuation, basically returning back to historical means, and then if it's an international stock, it's currency. From those four, the call, if you will, is one, dividend yields are already at 3% in EM versus 2% here in the US. And that's a pretty reliable indicator of how returns are going to look like. Second is valuation, right? EM valuation versus its own and versus the US looks very attractive. And then lastly is currency. The dollar's been on a 9-year bull run. You can make the case that this will continue, but at some point valuations do tend to revert, and therefore you're going to have the tailwind of currency and valuation for emerging.
Dan, develop this idea a little bit further. I know the team at Morgan Stanley have the same idea. It's international over the US story. Just give me the why.
Yeah, we did an analysis recently looking at beta, and what we found is that U.S. markets have the highest beta, and that's changed over the last couple of years. And I think that's due in part to the concentration in high growth and high technology stocks. And one of the things we've highlighted is that's a very crowded space. It's a space that we think the multiples can't sustain themselves if we get this slowdown in U.S. economic growth, which we think is likely coming into the second quarter, going up against the hardest comp year over year versus last year. And we saw a lot of transitory effects of inventory and shrinking imports in the first quarter data that didn't make us too sanguine.
Elisa, your thoughts?
Well, it's interesting to think, so this is, if you're going to retire in 5 years, don't do it.
Yeah.
So the question is this a 20-year bet? Is this a 10-year bet? And that actually makes a huge difference,
yes,
because what are we talking about in the interim? So I don't know. I'm looking at right now, people have not gotten the dollar right again and again. We're looking right now at the MSCI Emerging Market Currency Index that is at its lowest level since January 23rd. So it's been retracing the gains pretty much almost entirely of 2019. And we're looking right now at a market that is completely lopsided, expecting that there will be some sort of trade agreement with the U.S. and China, and perhaps this is just a trade tactic. But frankly, the risk of a material unraveling of some sort of agreement has gotten materially higher, and markets are not pricing it in.